SCHG has taken the market by storm. The recent growth in the market has presented opportunities for significant returns for some investors. But what is this ETF, and how does it stack up against some of the others? Let's take a look at SCHG's past performance, future outlook, and comparison against some large ETFs such as SCHD and the S&P 500. So the ticker symbol is SCHG, and this is the Schwab US Large Cap Growth ETF, owned and managed by Charles Schwab Asset Management Group. Similar to their other ETFs, they keep a very low expense ratio of only 0.04%, and the objectives of this fund are to track as closely as possible, before fees and expenses, the total return of the Dow Jones US Large Cap Growth Market Index. Now, some benefits that we need to note here are that they are considered a low-cost fund, and they offer a diversified ETF with high growth potential. They have recently conducted a 4-for-1 stock split, bringing down the share price to make it more appealing for other investors. Now let's dive into some of their specific holdings. So this fund has been on the market since 2009. As you can see from the performance data, they have had some extremely good returns recently, especially in the 1-year time horizon. We can see that they had a year returning over 43%, and on long-term time scales such as the 5 and 10 year, we can see returns of 20% and 16%. Now these are above average returns for an ETF, especially if we compare them to another common fund that tracks the S&P 500 such as VU and SPY, as they typically return about 9 to 10% per year. The holdings for this ETF are heavily focused in technology, with 48.8% of this fund being in that sector. The next up is 13.1%, and this is in communications, 11.9% in consumer industries, 10.7% in healthcare, and 6.7% in financials. This fund is clearly very tech heavy, which would contribute to their higher risk. When we start to dive into their specific holdings for this fund, it is no surprise why they have performed so well, with their top holdings being Apple at 12.68%, Microsoft at 11.45%, Nvidia at 10.69%, Amazon at 6.25%, and the list goes on. The full list is technology with the exception of Eli Lilly. Now, in my opinion, this could have really high upside during bullish markets when tech companies are really rallying, but this could also have really high risks if the markets are not growing in the technology sectors. Now let's look at the performance for how this fund has been doing. Now as we look at the graphs here, we can see on a percentage basis they have performed very well on most time scales. We'll put some number to this to see how the investments have turned out. But first, on the 1-year time scale, we can already see that they have done nearly 44% growth. This is really driven by that tech boom which we have seen in the markets recently, with big companies such as Nvidia really rallying to all-time highs. Even on the 5-year time scale, the fund has more than doubled. We can see that it took a dip in 2021 and 2022 due to the market volatility during that time, but those are the examples of the risks associated while investing in these very tech-heavy funds. Now that we've got a good understanding of the past performance, let's put some numbers to this and see exactly how it would have performed with compound interest. This spreadsheet has a ton of data, which we will walk through to understand the performance of SCHG. So I've pulled the ticker data from around Q4 every year from 2010 to present day. You can see in 2010, the share price grew from $3.17 all the way up to today when it is worth $26.69. This being a 741% return overall on the shares. There's also a number of years where you can see that they had very high returns, as we can see this in 2013, 2021, 2023, and even so far in 2024. They have returned over 30% on the shares. Now, as this is a very tech-driven ETF, it could also take those big hits when the market does poorly. You can see this in 2022 as the ETF took a minus 30% hit. However, after all of this, the returns on the shares still work out to be 16.44% average increase per year, which is very high. So let's see how some different investments would look in this calculator. We can start with a $50,000 one-time investment, which would have turned into approximately $388,000 based on my calculations. Your yield on cost would have even grown up to 3.47%, which is a bit better than their typical 1.5% yield that they offer. Now these returns are in line with the 740% that we saw before, and if dividends are reinvested, this goes a little higher, growing up to 777%. Now, we'll slot in a $10,000 investment just to see how things would pan out, and you can see that this would end up with $77,700 in profit from that initial one-time investment on this 14-year time scale. Now the last thing I would like to look at here is some comparisons to those S&P 500 ETFs in VU, SPY, and even SCHD, just to see how they all compare on these past returns. So on this chart here, you can see that we have 4 different lines plotted. So the blue is SCHG, the red is SCHD, and the yellow and green are VU and SPY. The first thing you'll notice is that VU and SPY move pretty much the same. They both hold the S&P 500, so they're very similar. Now when we start looking at the other lines, you'll notice that SCHG grew the fastest. However, as we mentioned before, they also have very high risk due to that very high technology stake. You can see in late 2022, almost 2023, they took the biggest hit from that volatility in the market. They almost dipped down to the same levels as SCHD and the S&P 500 curves. Now they did rebound, but this is just an example of that market volatility that we discussed earlier. Now in the end, you could see that they did outperform the other ones. But again, very high risk with this one. It could have high returns, but it could also have very high losses. Now, in my opinion, SCHG is not one for my portfolio. This comes from my own risk tolerance. I'm not a fan of having my portfolio being very volatile, and for that reason, I don't want to include this as part of my holdings. Now, again, everybody's entitled to their own opinions, so let me know what you think in the comments below about SCHG, and if there's another ETF you prefer. Let me know what you think of this analysis and past performance review in the comments below, and please like, comment, and subscribe for more finance education related content.